Are you wondering what's going on in the housing market right now and want to know how it's going to affect you when you start looking for houses in Southern Maryland? Watch this video and I'm going to tell you everything you need to know about the housing market in Southern Maryland. All right, what's up everybody? This is Schou with EXP Realty in Maryland. I'm going to talk to you today about the housing market in Southern Maryland, but before I get started, if you're looking to move to Southern Maryland, if you need any help, make sure you use that contact information below. Call me, text me, and I'd be happy to help you. You can also scroll down to the first comment, click on that link, and it'll schedule a Zoom meeting one-on-one with me where we can talk about your home buying needs. And last but not least, if you find these market updates helpful, if you find all the other content about Southern Maryland that I put out helpful, make sure you click the subscribe button, click the little bell so you're notified every single time we put out new content about living in Southern Maryland. All right, so let's go ahead and get started. Like today, I'm going to give you a housing market update. Right now, it's July 5th, 2022. So I just want to give you an idea of what's going on and where we're looking to go. We're going to really focus on mortgage rates, and we're going to be focusing on housing and like kind of where the inventory and supply and demand are going. So the biggest thing on every home buyer and even home seller's mind right now, of course, is mortgage rates. Mortgage rates rising have definitely changed the landscape of the housing market. So we saw mortgage rates from the last video get up to around 6.25%, which is near historic highs for the last few years. But as of this recording, as of July 5th, 2022, we're starting to see the rates decrease again. So when I actually got quoted for a loan today for a refinance on my investment property that's in Leonardtown, I was quoted 5.25% for a 10-year ARM on an investment property. Now, it is a 10-year ARM, which carries normally carries a lower rate, but it is an investment property, which means normally it's a little bit higher rate. So that's a really strong rate considering where we were. Now, is it that 2.99 that was a few years ago or a year ago? No. But is it more affordable right now than the 6.75 or 6.25 I was quoted earlier this month? Yes. There's definitely improvement, and that is lockstep with inflation and the expectation of what the Fed's going to do at their next meeting. So like I've said in all the other videos that I've done about the housing market, if you're worried about mortgage rates, watch inflation. If you're seeing gas prices go down, if you're seeing other stuff start to slowly decrease, that's a good sign that inflation is slowing. You can also watch the different headlines and the different metrics and the different economic data that talks about inflation. You can have a pretty good idea of what mortgage rates are going to do, because the Fed has definitely come out and said that their desire to raise interest rates and what pace they're going to do that is directly related to the out of control inflation we've been experiencing for the last few months. One other thing that's definitely affecting rates, and the market is watching this, is the thought that there is most likely a recession happening or about to happen in the economy. Now, a recession is just meaning that there are two down quarters in our economy when we're looking at the GDP. So two decreases in our GDP. And it looks like, as of this recording, it's pretty likely it's going to happen, which means consumer demand is going to be lower, which means supply is going to be higher, which means inflation is going to decrease. And with inflation going down, we should see interest rates stabilize or even possibly decrease. Now, I don't know where I would put my hat on. I think in this new environment, it's very volatile. Things are changing constantly. It all comes down to whether you want to risk, the rate you currently have, because it could be a risk. It could shoot back up. It could drop down even further. But once you get to that point in this housing market and you find that house, it's really up to you at that point. When you find that perfect house, talk to your mortgage broker, talk to that person that you trust, and really have that conversation. Is it the best time for you to float? Is it the best time for you to lock in and really have an in-depth conversation and take all that into account? All right, so like I said, we're seeing a definite small decrease in mortgage rates. And with that, I personally, anecdotally, have definitely seen more reach outs, and I've talked about this before, from this YouTube channel, from my different ads that I have throughout the internet. I'm definitely seeing more interested buyers looking to get homes. And I'm definitely seeing more homes in our area have a little bit longer days on market than they have previously. Now, it's really hard to give you an exact number for June and July because a lot of the housing data that we get is normally a month or two old. Now, looking at the chart that I have on the screen right now on days on market, you can see there's a slight uptick in days on market from 5 in April to 6 in May. But I'm curious to see what's going to happen in the June and July numbers to see if those numbers really start increasing. I think it's going to be something that we see because I'm just seeing more properties sit on the market for longer periods of time. Now, is it like these properties back here? This is St. Mary's County where it's 115 days and 105 days for these months and a 60-day-ish average. No, it's not going to be that. But there's going to be more leverage for buyers going into this. And so, of course, everyone wants to know, what does this mean for home prices? I'm seeing home prices kind of stay about the same. That increase that we saw, like 20% in other areas and stuff like that. Looking at this chart here, you can see on Redfin, you can see that growth, and you can kind of see it's continuing that growth. But like I said before, it's really tough to know if the growth is slowed because it's only giving us data to May 2022. Again, anecdotally, I'm definitely seeing a slowdown in the price increases. And I think what's happening with some houses actually is they tried to get out ahead of that and price their home a little bit higher than really the market was dictating. And those are the houses we're seeing now that they kind of outpace that growth. They're sitting on the market. They're taking price decreases. And I think we're seeing a stabilization of the market more than anything. I do not think it's a crash. I do not think it's a bubble. I do think it's a stabilization where it's going to be a much more level playing field between buyers and sellers. So hopefully this information was helpful. Hopefully this quick market update really helped you get an idea of what's going on in Southern Maryland right now and kind of Maryland as a whole. If you have any questions or need any help, make sure you use the contact information below. Call me, text me, and I'd be happy to help you make those home buying decisions. Also, if you want, you can scroll down, click on the link, and it'll schedule a Zoom meeting one-on-one with me where we can talk about your home buying needs. And last but not least, if this content was helpful and you want more of it, make sure you click the subscribe button, click that little bell so you're notified every time we put out new content. Hope to see you on the next video.